Good evening, good afternoon, good morning, wherever you're joining us for the Sunday market breakdown. As always, I'm just going to give it a couple of minutes. If people did want to join, okay, cool. So I can hear that we are live over here. That's good. Nice. I don't want to be hearing myself back through the speakers. So yeah, slight change of schedule this week. It's 15 minutes ahead of the usual time. Hello, Michal, joining us today. Well spotted that we're on a little bit earlier. The main reason being, of course, that somehow England have managed to luck themselves into the final of the Euros. So we'll be needing to run off to go and watch that a little earlier today. But business first, we're going to get the Sunday market breakdown done. For those of you who are joining for the very first time, a little about me. My name is James. I'm a Forex trader, and each week I go live here on the YouTubes and break down the market for the upcoming week. But before we do that, I always start off by going over the trades I've personally taken during the week that we've just had, and give my reasons for why I took the trades and how I managed them. And in that, I hope that you guys who are watching kind of pick up a little bit about how I trade. It's a little bit different to what I've seen out there and people talking about, but I've been doing this for the last 5 years now, 2 of which were unprofitable. So I know the pain of making it as a Forex trader. It is not the easiest thing to do, and certainly not something that I believe everybody should do, as it's quite difficult psychology-wise, and there are certainly easier ways to make money out there. But if you do have it in you to become a Forex trader, it is probably the most awesome thing once you get out on the other side, just because of the level of freedom that it gives you. You have no customers and no staff members. It's just you, the charts, and your psychology. So each week you go to work on yourself. I highly encourage people to journal their trades, meaning writing everything down that you're doing and learning from that. If you don't write down what you're doing, you're literally just gambling and not learning anything from the markets. So anyway, without further ado, this is what we're going to be doing today. So typically, as I said, I'm going to be looking at the trades I've taken this week, why I took them. Then we're going to look at the week ahead. For that, we'll be checking the news and then moving to the technicals. Just quickly on that, people ask me, do you ignore the news, James? And the answer is no, I do not ignore the news. The news, whilst I don't believe it dictates what the market will do, it certainly makes the markets volatile. So I caution traders to watch out for the news events, know when they're happening, and also, like the trades you take note of what happens on the charts when the news event is actually released. Now, it can always go either way. So we don't try and predict the news. Instead, what we do is we literally just turbocharge the charts with it, meaning that whatever you've got marked up technically on the charts, the news has a very high chance of turbocharging the outcome. So instead of having to wait another couple of days for price to eventually reach a level, what the news will typically do is turbocharge that. So basically it just speeds everything up. So the news is just as important, and also I look across the whole market. I don't trade 1 or 2 pairs. I think you can do that, and I'm not against it, but I do think it's wiser to trade. Well, you don't have to trade all the pairs. There are some pairs that I just detest trading because they move too slow for me. But in general, you should be looking across the whole market to get an idea of where everything's at. So I look at stocks, I look at the dollar index as confluences to what currency might do. So, a big stock sell-off is going to power up the dollar. So if you look across the dollar major pairs, you're going to see an immediate immediate drop in certain things like pound dollar, Aussie dollar, New Zealand dollar, and things where it's the other way around, where you've got dollar yen, dollar Swiss, dollar CAD, you're going to see a pump up from the dollar as it strengthens. So that's why you've got to take into consideration the whole market and not only trade the pair blindly, ignoring what's going on in the rest of the market. So without further ado, I'm going to get started on trades taken this week. This one I'm actually going to document as a missed trade because it happened during the night, so I didn't actually take that one. I had it marked up, but we've had pound dollar short, a euro yen long, which I was really happy with, and a pound dollar short late on Friday, which is yet to play out. So sometimes the weeks don't deliver a lot of trades, but as I tell everybody, week in, week out, same old boring stuff. I'm not looking at taking trades every single day. I'm not looking to force any trades. I'm literally just giving me what the market delivers. So I'm going to jump over to the charts right now, and we're going to look at this first trade, which is pound dollar short on Thursday from the 2.1213 level. And hopefully you're seeing that on my screen now. So what I'm going to do is first of all, why this level? So on my chart here, what have we got? We've got my gold lines, which are more weekly levels. And then the white sort of faded lines here are my intraday levels or daily levels. You can call them whatever you want, but basically, let's say they're more likely to work out during the day as opposed to waiting for a big swing trade kind of opportunity. So this level that I had marked up here at the 1.213, I think that was the level. Let me just double check. What have we done here? 2.1. So I think what I've done is that's the pound New Zealand trade. Excuse me. And that should be the pound dollar trade. They happened on the same day, so that's why the mismatch here. But we don't worry about that. Anyway, this was the level, 1.2932. So we wind it back. Where is the level from? It's from the candle body close. So as you can see, we had this move down back in July 2023. So basically a whole year ago. Price moved down, pulled back, and then that's now my level because we haven't been back there for a very long time. So quick recap on how I trade. I wait for levels to get hit, and the level that I will take is the level that becomes most relevant on a given day. What does that mean? Basically, context is everything. So we're not just going to blindly take a level. So traders who trade support and resistance, I think, is absolute nonsense, right? Because first of all, a level is only a level for a sell when it's been used as a sell level previously. For example, support and resistance, you tend to find that where you've had support previously, you can't now just treat that same level as resistance, right? Because I'm interested in how price got there and when it moved off. And this is, you just see this across the charts everywhere. We can go into some more detailed examples, but basically we're looking for price that's been overreached. So in a given day, if I turn on ATR, this is an indicator that I do use, the only one I use, and it's only used as a confluence. It's not a given, right? So with ATR, as you can see here, it's a very faded line. So hopefully you can see that on your screen. I will zoom right in so you've got it. This is the average true range. And what that is it's basically how far price is likely to move in a given day based on the historical performance of that pair, right? So if price is overreached, meaning it has gone past its average true range for the day, it doesn't mean anything unless you start compiling it with other confluences. So for example, I have my level here because it's the candle body close from the level that price hasn't been anywhere near it for over a month, right? So we've had all this a year, not a month. So we've had all this price action. Price has gone on a little holiday. It's gone all around the world. It's coming back. And now that becomes more relevant to me today on this given day if price breaches the average true range. So if we get a breach on that and other things align, for example, the dollar index comes to a level, which in this case it did. So if I jump over there now, just want to see that on Thursday. That was this one here. So on Thursday at around the same time that I took this trade, the dollar index hit this level here. Now if we zoom out, what is this level? It's a daily level, right? So the weekly level was just above, daily level just below. And I'm not looking to trade the dollar index. The dollar index is literally an index of the dollar's strength at any given point. But when it hits a level, all other dollar pairs tend to pull back. So it's used as a confluence. I'm not going to trade it, but if it's happening at the same time, I'm building reasons to take the trade, right? So hopefully that makes sense. Anyway, going back to it. Let's go back to earlier in the day. So earlier in the day, I'm looking at this and I'm going, well, look, shit, if price gets all the way up there today, it's got to move 80 pips into the level. And if it moves 80 pips into the level, it would have breached average true range for the day. And because it's breached the average true range for the day, it makes that a whole lot likely to happen. So what we're looking for is price to move in strongly, not just creep up to it, because if it creeps up to it, it's more a sign that price is just going to go right through it, just creep through it, and then we're looking for a pullback to the first area of potential struggle here. Now, this first area of potential struggle, I believe, was taken from not over here. I think I actually got it as we moved up towards the level. So I'll just play price now. Maybe we can do it on the hourly. Yeah. So level's just here. Let's move that forward. And boom, we had price come straight into here. And I believe the news event is what helped us get there. So if I just jump back to that and we look at last week. Let's look at Thursday. I just want to show you this because it helps explain how news events help us actually get to where we want to be. So it was dollar CPI, I believe, which was around 12:30 GMT. I won't change it now. But basically we had dollar CPI and we had this massive spike in price. Now I love this. So when we're a good like 80 pips away, 50, 60, 80 pips away from a price getting hit, I am not afraid to have my order here. Because as I said, I don't expect the unexpected from a news event. Can it blast past my entry? Of course it can. But at the end of the day, the charts already tell you in a way what's going to happen, right? So price will still get to the level. If you go back and back test everything, you don't usually take into account news. The charts still play out as they would usually. So what we've got going on here is we had the strong move in. Price went into around about 13, 14 pips of drawdown, and then we had the pullback to the first area of potential struggle. Now, this first area of potential struggle, I was targeting lower. I would have liked us to come down here. Now, why there? Well, the reason there is because potential struggle is likely to happen when we start to get into what I call traffic areas. So here we've got price action where price was slow before. So what we'd have to do is we'd have to get through all of that. And usually what happens when price comes back here is it will start to slow down. But what we actually saw on this, I believe I'll have to jump to the 15-minute to show it correctly, or maybe not. So price did hit here. Yeah, that's it. So at this point, my area of struggle was actually here. And I moved it back once I saw price already struggling here. So we got to here. We had a small pullback. I wasn't concerned about that. But when I saw price struggling here, this is when I changed it to here. And as we managed to push down again, that's when I took the profits on there. And the reason I wanted to play that slightly more dynamically was because if you look at my chart and we zoom out, I'm actually waiting for the higher levels to get hit. We've got a couple of this big one up here. I do believe that whole wick to the side here will be getting filled over here. So that was my zone. This was the daily level. I was willing to take it. And if price breached it, what I would have done is taken another position higher up in that case. So here, let me jump down to the 4 hours so it's a bit more easier to see. what we would have done is if price came up here and then continued to go up, I would have taken the next level, which is my level that I actually took on Friday instead, as well. So because I wanted price to come higher and it was quite likely that it would, I cashed all of my profits just here. And with that, I actually posted that to the group, I believe. Pound dollar, yesterday's cash in full. Yeah, this one here. So if you don't know what this is our school community. It's called Leveled FX, and it's completely free to join. You can go there by clicking the link in the description. You just enter your details and join. It's free, nothing to pay. And what we're doing here is basically I'm sharing throughout the week what I'm looking at. There's also a full course in here as to how to do the type of trading that I do. And my goal with it is to have 100 funded traders created by this time next year from the work that I'm doing here. So that's the link in the description here if you're interested in joining that. But yeah, just an example here of how I posted that as we were getting up there and what my plan was exactly for the guys who are following along and learn how to do this. So currently there's 384 members in there, and we are still growing every week, which is nice. Anyway, going back to it, that was the pound dollar trade. So Mihal also in the comments there saying that he was in that. Nice, plus 40 pips within 1 to 2 hours. Yeah, it was nice. So just a perfect example of the system working. I don't even like calling it a system. I mean, what we're looking for here is price moving into a strong level and then a pullback. It's going to happen because the only way traders can take their profit is when we're taking a buy example here. So if traders are buying down here, they're pushing the price up. Whether it's traders, bots, banks, whatever, I don't care who's doing it, right? It doesn't matter. What matters is there's volume in the market pushing price one way. And the only way to extract profits from that is by taking a trade in the opposite direction, which creates a pullback. And that's when we get in, because it's much more safer to do that, knowing that there has to be a high probability of a pullback occurring here. So for anyone that's new and following along, hopefully that makes sense. Right, let's move along. The GN trade, this one was a missed one for me, but it did happen overnight. I know some traders, I mentioned no names, but some of the guys in the community were entertaining, trying to get involved with GN around here. I'm not sure why exactly, to be honest. If we look to the left over here, there's nothing really over here. And the other thing that I will mention just whilst on is during that week, which day was it? Am I looking at the right week? Yeah, 7th to the 13th. Sunday. It's like when you open the fridge and you're looking for the milk. You can't actually see it, but it's right in front of you. We had the interest rate decisions on New Zealand. I just can't remember which day it was now. But I guess it's when we had this huge spike here, right? So it would be Wednesday evening. So Thursday, early hours. Anyway, whatever. We had strong New Zealand news and a lot of weakness. Here we go. I don't know why I couldn't see that before. So Wednesday, as I said, again, the charts tell you everything. So I'm looking for the thing. I can see it happened on Wednesday because of the big spike here. So what happened and what caused that big spike? Again, you don't really need to know exactly why. I make it my business to know why, just because, as a professional trader or somebody that relies on it for income, I think you should know what's going on. And I think you should write down what happens. So basically the interest rate decision came out. It was exactly as planned. So there was no increase. So for that made the New Zealand dollar extremely weak, and we saw this across the board. New Zealand dollar, where was it? Wednesday. So yeah, here it just crashed, and we saw that across the board. I think a nice one to see that on is probably Aussie New Zealand, because these two are probably I mean, they've been moving quite slowly, and then all of a sudden we had like 100 pip move plus at that time, again, Wednesday, 2 a.m. So it happened overnight. Now, the reason I'm mentioning this is when you've got a move like that happening in the markets, what it tends to do is it skews price, meaning that the charts that you're looking at, I would say, you have to factor in that if you've had the big move but no major pullback from it, the charts are a little bit skewed and you can't really take everything that you're seeing as a given. So I guess what I'm trying to say with that is be extremely cautious after a move like that to rely entirely on technical analysis. So for me, it was just one of those currencies that I would rather not trade that week. So for anybody trying to get into, a New Zealand dollar type of any pair, like New Zealand Swiss, New Zealand CAD, Pound New Zealand, Euro New Zealand, whatever, I would be just very cautious getting involved. It's much better just to let price play out than to try and trade it as if it's just a normal day. Like you've had that big move. So much easier and much more safe to just kind of avoid it. And with this level here, it was a very clear level over to the side here. I wasn't on screen to trade it at the time because I believe it happened at price hit at 1 a.m. So I would have been fast asleep at that point. But if we had this the next day, then I'd definitely be looking to get involved in this. And price did pull back. It did actually do around 60 pips in total. I mean, the whole move, if you take the whole thing, it was 85 pip move. But we did have a little bit of drawdown from the level, which was to be expected because I believe we had that last time. Maybe. Yeah. So you can see over here, it actually had 45 pips of drawdown before. But this level that I had refined to the 4 hour, I believe it was the 4 hour. Where are we at? Maybe it was the hourly. Yeah, it was the 4 hour. I just lost it because price is on there now. So just here, I wanted to take where price moved off from. So I guess people going earlier were maybe going from this kind of level or something. But yeah, just if in doubt, wait. Like I always tell people, you're going to get paid if you wait. Much better to miss a trade than to be too keen and jump in when you're not 100% certain, or like if it doesn't look like it's 100% certain that the trade fits your plan. You will never be 100% certain. That's trading. But anyway, why was this relevant? We basically got to average true range just as the day slipped into the next day. So price was overreached and due a pullback. So as it hit the level, we obviously had a nice pullback from that. So that was the trade on GN, which was missed. But yeah, if you were up at that time zone, who knows? You could have caught that. So I thought I'd just document it anyway, but it was a missed trade for me. Now on to Euro Yen, because this one was nice. I don't know if anybody in the community or anybody that's joining the call saw this one. By the way, if you have been following along, I've been doing these videos now for, I believe, the last, maybe this is the 4th one. So we're still pretty early on with all this. But if you have been following along and what I'm doing has made sense to you and you've tried to have a little follow along and do this yourself, pop in the comments if you actually took any of these trades or if you saw something like it. I'd be keen to know. And even better, you could go one further and you could go ahead and actually get involved with the community. As you can see, we've got the live Sunday market breakdown, which is happening right now. So these are in the calendar. Each week we do like 2 events in here. One is the Wednesday check-in, which is basically I just hop on a call with everybody live. People can ask their questions. They can post their trade setups. I give an hour of my time to help anybody with anything that they're struggling with, or even just give feedback on anything that they're looking for. So it's a lot of value in there if you want to use that. And then, as I said, in the classroom, we've got the leveled masterclass, which is the full course on how I do what I do. And there's some cool leaderboard stuff in here as well with some gamification. So if you come in here, you can actually level up, and you earn points by engaging with the community, posting, liking, or acquiring likes if other people like what you're posting. Yeah, so when you level up on that, I give away free one-on-one mentoring calls, and at level 7 I also give away funded challenges. So yeah, it's a fun place to be. Early stages so far, but if you are wanting to get involved in that, I highly encourage you to. If something like this existed when I was up and coming with my trading, I would have definitely excelled a lot quicker than I did. So make use of it. It's there, it's free, and I don't plan on charging for this free community. What you see there will always be there. It's not going anywhere, but you'd wish, put it this way, I wish I'd started trading 15, 20 years ago, not 5 years ago. So if you want to learn this skill, I highly recommend getting in there, and hopefully what I do and the content I create is refreshing to what's already out there. Yeah, hope that comes across. So anyway, the euro yen trade, just had a comment here, trigger my notification, but I didn't touch yen pairs for now. Okay, so that's a good point. Michal says, to the broadcast, can I do this? Yep. So you had the trade trigger for you, which is cool, but you decided not to get involved. Totally understand that. The yen pairs can be a bit wild, but we did have a big sell-off across the board with the yen pairs at, are we on the 4 hour here? So it happened, 1 o'clock on Thursday. Just all the pairs, yen pairs. So if we look at euro yen, Aussie yen, pound yen, New Zealand yen, and dollar yen, Swiss yen, they all just kind of shat themselves, which was interesting to see, because as you can see on the chart, like these pairs have just been rallying for so long. If we zoom right out, they've just been going up and up and up and up and up for quite some time now. So this is a weekly chart. So imagine this is 2020 here where my cursor is. So all we've really done since 2020, the last 4 years, we've just gone up. So I am at the point now where I'm actually looking to enter some longer term yen shorts. So I want to build a position shorting the yen pairs. So what I mean by that is I will get into trades. I will take the majority of my profits as a day trader, but I'm also leaving some profits on, because if we to get up here and we actually ended up moving down here, there's 2,500 pips to be acquired there. So because as we get into these areas, I just feel like it's a really nice thing to be able to do. I like to do it, build larger positions on some of the currency pairs, and just continue to day trade in between. Anyway, this was a really nice trade. We had what usually happens with the yen pairs when you do get a significant move like this, you will usually see at least a 50% pullback. So how I can show you that is just using a fib here. If we put it down to the move, you can see that we pretty much got to 50% of the move. I wasn't looking for that. I was still just waiting to take my profits at the first area of potential struggle. With this move though, I think we did have a pullback fairly early on. Yeah, so price moved off like this, and then as I said, we had price pull back, and the candle body close was exactly 50% of the move. So just be aware of that. I don't use fibs for analysis and the reason for getting into a trade, but for trade management, I will use them from time to time just to get some kind of idea where price might start to struggle if it's not obvious from the candlestick price action pattern. And then after we'd made that pullback, we just absolutely rocketed down, at which point we had this weekly level. So I'll show you what I mean by the weekly level. This was the nice the last push up, and the last big sell off we had was the week commencing Monday, the 27th of November, 2023. So anytime we've had like a push up and then a major pullback, I'm always like looking for the candle body close to define the level area there. And then since then, we've just pushed on up. So that's just one case of it. But if I zoom in on the one I was looking at, it was basically this. I'm trying to think if it was from before or if it was more recent. It's doing that weird thing where it doesn't stay level. Yeah, so that's where it was here, the sell-off. So we had this point and this point. This point I've got marked up from up here, and you can see it was actually used after the price moved away for so long and then came back, tapped into that, and then moved off 420 pips. So these weekly levels, you can't ignore them. They're super solid. So why is my level here? Well, my level's here specifically because that was the candle body close before price moved off in a big way. And then we had, what do we have here? We have the gap, right? So I love a bit of a gap. So when we've got this area here, what usually happens is price closes here at the end of the week on the Friday, and then on the Sunday night when the market's open, for some reason it's opened up down here, right? But what you can almost pretty much, I'm going to say 90% plus of the time, not always. So you can't, this isn't written in stone. And as you can see, price did actually move away from here for quite a while before it came back. But when a gap, and this is the weekly, remember, so you've got to be able to hold on to trades for weeks and a lot of drawdown here. But usually if you see this on the lower time frame, that's when I'd suggest actually trading this type of thing. But the gap usually gets closed, and you can see that exactly here. Price came back to fill the gap, but it took a month to do that. So not advised if you're trading the weekly chart there, but you know, if you see that on the daily where price opens up and it slipped down, like I'm almost sure we're going to see a lot of that happening this week. What do we have? Donald Trump getting shot over the weekend. So I'd imagine that's going to have a pretty high impact on the markets. A lot of people will be fearing the dollar, I believe, and we should see spikes in gold. Basically just safe havens. So I'd imagine gold would be quite bullish on the market open. And we could see a big drop in the dollar. But again, we'll cover that a bit later on when we get to it. We've got quite a long way to fall with the dollar, and this will kind of be a catalyst event to get us there. So yeah, wouldn't be totally surprised if we saw a very weak dollar on the market open next week, but cross that bridge when we get to it. So back to the Euro Yen trade. So why here? Weekly level. And if my weekly level failed, guess what? I had the backup plan. Again, part of how I trade is to always have a backup plan. Don't enter any trades without already knowing what you're going to do if you go into drawdown. The way I use stop losses is not the traditional way. I don't put a stop loss at 20, 30 pips away. I just think that's quite ignorant. And I get that for some traders that works. I just don't like taking losses at all or ever. Of course, I still get them from time to time. I'm not perfect, and sometimes the market does what the market's going to do. But how I use stop losses is it's on there. I do use them. I'm not going to put them anywhere near where my entry is. Like my stop loss on this was, where are we here? Yeah, my stop loss here was under there, right? So I'll just change the color so you can see exactly what I'm talking about. So as you can see from my first entry, stop loss was over 100 pips away initially. And my backup level was just 50 pips away. And on a yen pair, that's not a big backup level. It's just more the case that obviously price was massively overextended because of the move. So like average true range, if I drop, actually, I don't believe average true range was that. it was kind of coming up to average true range, I believe. Yeah, that's why I thought, because we had this move and average true range was massively overreached. So I don't know if you can see that. What am I on the 4-hour chart? So average true range being here, price smashed through it, kept going. Then we had that initial pullback, then it kept going. And then as we got down here to these lows where we had that long wick, I was quite happy to not only take the weekly level because of that, but I did see that nice wick there as well that had given 40 pips before. So yeah, and we came back and we could have just used the level over and over again. We came back, we delivered 100 pips from the first level. And then after we hit again, we delivered another 150 pips. And then again, we delivered another 50 pips. So yeah, I think price wants to come a lot lower still. And I think this might be the beginning of the yen pairs starting to pull back. But we do still have the higher level, which I'm still looking out for. If I zoom out, show you the bigger picture, we've kind of got this 1, 2, 3 touch. Third touch of a trend line is always a good one to go for. Again, don't trade trend lines on their own. I trade levels, but again, added confluences. It's nice to see that. So yeah, that was the euro yen trade. Didn't need to use my backup level, which was nice. I had like 12 pips of drawdown before moving up 62 pips off of that one. But as I said, there is tons of pippage to be taken there. I just always cash my profits at the first area of potential struggle. And as I believed the yen pairs wanted to drop back further, I had no real reason to hold a running position. So usually what I do is I cash 80% and I leave 20% running. But given the fact that my bias is for yen shorts, there would be no point in me holding a long-term buy on that. We might come all the way back up, but my bias from where we're positioned right now is more short. That doesn't mean I'm just randomly entering shorts right now. Obviously, I'm still trading as I usually would, but that's why I wouldn't hold a longer position. So anyway, that was the euro yen trade. Going to take a sip of water. If anybody has any questions, feel free to ask them. I'm going a little bit quicker today just because the mighty England are playing the Euro final. That's a joke, by the way. I do not believe we're the mighty England. But we have somehow managed to luck our ways into the final. So, because football. Yeah. Football speeds everything up for me today. We'll see if football's coming home. So, if no more questions, I'll just carry on. Again, all of these sessions I do for free. They're live, and you guys can ask whatever you want. No question is too stupid. Believe me, I asked far stupider questions than the ones I've had recently, so ask away. Right, back to the trades. Oh yeah, so the last one, really slow market this week. I mean, if you think about how I've traded this week, Monday, no trades. Tuesday, no trades. Wednesday, no trades. Just waiting for the right setups. And then Thursday, we finally got pound dollar. Pound New Zealand happened in the night. Couldn't really do anything about that. Euro yen also on the Thursday. And then the pound dollar short on Friday, which could play out interestingly. Again, we've had the news stuff happening in America. But in general, I still believe that news and events only turbocharge what we're seeing on the charts. I will stand by that time and time again. And this level that we've approached here, so turn off ATR, this level that we've approached, we did have a big sell-off from that. We dropped almost 210 pips from the high there and then continued down. So, yeah, I do think this level should hold. It's a significant enough move for me that to say that this is a strong level, and we have obviously had a strong move in. If we drop down to the hourly, we came up, we had this, it looked like we were going to short from here, so we dropped 30 pips from here, and then gapped up, and then tapped into the level, and then we've just gone sideways. So we haven't really pulled away from it yet. So yet to see what happened there. But guess what? Up above, what have we got? We've got a backup level, because that's how we trade. We don't get into trades randomly without knowing where we're going to place the backup. So that's what I'll be waiting on when we open on Sunday night. Most likely nothing will be actionable until after the London Open on Monday. But yeah, that's it. So those were the 3 trades I took last week. So I believe it was around 60, 90, about 120 pips off the table, which was not bad. Because look, I'm not looking to make 300, 400 pips every day. You know, I'm just taking the highest probable trades and just doing this on a consistent basis. And once you do this and you stay consistent with it, I'm telling you, you can go ahead and take funded challenges. You can use prop firms. You can pass the challenges as long as you're patient and you take only the best setups, just by taking, 30 pips here, 40 pips there, 60 pips there. It stacks up because you're not taking all the shit trades in between. That's where traders either lose or stay break-even traders and never really make it. So the longer you can wait, this is the biggest lesson. If someone says to me, like, what's the biggest thing I can do to make the biggest change to my profitability as a trader, specifically trading the way that I do, I would tell that person, take less trades. Just trade less. Only take the strongest setups and leave everything else to the rest. That's all you need to do most of the time to go from break even to profitable. It's just about taking less setups. So anyway, those are the 3 trades. 4 if you include the missed one. Now what I'll do is go ahead and start the weekly review, just looking at what we've got coming up. I mean, I've been going through some of the pairs here anyway, but in general, I'm not waiting on a lot of things right now. So GA, we've been very bullish. We've had a very bullish pound for a long time, actually, for the last week at least. So we're at these sell positions now. I would like to see us get up here, but again, this is GN, by the way. So GA, if GA and GN could have some alignment and hit this level, hit their levels, let's say. They're obviously not going to hit the same level because they're different pairs. But if they hit similar levels at the same time, that would make the trade extremely palatable, shall we say. There is that also to look at on GN. So maybe that would get us all the way up to here. I don't know. Again, I just build confluences around levels. It's not like rocket science, right? The most important thing is how price gets somewhere. So if we've had a strong move in, price is overreached, and we're about to hit a level, you just got to take the trade on the level. That's it. And you're almost guaranteed to get a pullback there. So that's all we're doing. GN, I've got nothing really until we get a bit higher. There is a level just here, so we'll go ahead and put that on the chart. But these are daily levels, so we had a big move off of that. And then the next daily level for me on GN is going to be up here. Hopefully you can see that. So that's where price pulled away. Then we had the pullback and we had the move off. The gold level in between is just the weekly level. So just to give you, I believe it's a weekly level. Oh yeah, so it's from, my chart was too zoomed out, from the candle body close just here. So yeah, randomly, it looks like price just randomly pulls back from some areas. Like here, there's no like daily level, but I can guarantee you there'll be something in there that made price pull back. So that's GN. GU, you know what I'm waiting on here. Either a pullback from where we currently are. We're looking for around 48 pips on that. 40 to 50 pips, something like that. Otherwise, the upper entry is around the 1.3026 level. So waiting on that. And again, that should pull back to go level, what I call level to level. So we'd be taking that level to level, and I would take twice the size of the trade that I took from here if we were to get up there and this trade was still active at that time. Obviously, this trade down here we cashed it here in full. Now we've pulled up higher. That's exactly why we take profits at the first area of potential struggle. Otherwise, you would have got absolutely nothing from taking that trade. And you may even be in drawdown if you fail to decide to get out at break even. So we always pay ourselves first and then let the market tell us what's going to happen next. But you look at the chart, you can see what's going to happen. Like we've had this huge, strong full-bodied candle to the upside, and the same again the next day, leaving what I would call a bullish wick, meaning that usually if you end the day like this with the wick being bullish like that, price will come back and fill the wick once more. So that's exactly what we've seen, and then we've closed very strong on Friday as well. So I wouldn't be surprised if we did come up to the level above. But yeah, so anyway, moving on. Pound yen, don't really want to be touching these right now. I would like to see what you can sometimes see is, price coming back to the level to retest it and then moving off. But I'm just going to have to sit on my hands on this one for now, because as I said, I would like to see this upper level getting hit. So look at that. We had price move off of that. But what's crazy about this is from 2008. So yeah, you'll all remember what happened in 2008. And that's kind of the sort of times that we're entering again now, unfortunately. But as a trader, that's not so unfortunate for you, fortunately. So waiting for those upper levels. Pound CAD, same thing. So all the pound pairs, I think, have still got a bit more juice in them. They've closed very strongly on the Friday. Wouldn't be surprised if we pushed up, if we even gapped up into the level. I prefer if it didn't, because I'm not really a fan of gapping, because it doesn't really leave a clean level behind. It just kind of makes the chart a bit messy. But we've got some really strong weekly levels from up there. Big wick on that though, so potential for drawdown could be 145 pips, which is pretty big, even by my standards. So just be aware of that. But yeah, pound CAD looking for entries around that 177.55 level. Pound Swiss, similar kind of thing. We've got the weekly level that we're approaching right now. Might see a pullback from there. But if we were to come up and tap the top level here, so don't know if you'll remember, if you've seen all the videos, but one of the first videos I did live showed the entry that we took down here. So unfortunately, I don't still have the runner going on that, but we've done 400 pips from the bottom there. So it could be a case of seeing another type of move like that, where we form like a sort of a double top and then sell off. Would certainly tie in with where other pound pairs are. So that's what I'm waiting for there on pound Swiss. Again, we've got so many pound pairs coming up to levels. I don't need to take all of them, right? I'll just choose like what looks like the best opportunity. And the Swiss pairs, they move very slowly. They have very high swap fees. And so, my preference is to stay away from them really. But if something sets up and it's just perfectly within my plan, I have to take it, because that's what I've told myself I would do as a trader. And that's what will make you successful, is following your plan, not saying, I don't feel like taking that today. Because I did something stupid yesterday. Your edge is doing stuff when it absolutely fits your plan. So just because you did something stupid yesterday, like you took a trade that didn't really fit, that can't be your reason why you don't trade today. And this is part of the psychology game that traders struggle with, I think, a lot. So yeah, anyway, CAD yen, obviously yen pairs pulled back. Same kind of story with this really. I am waiting for a higher high before we tap into something, a move like that. This is the weekly level again. So yeah, these wicks back from 2007. I've lost my arrow. There we go. Let's go ahead and delete that. I know what I'm looking for. EA. Been waiting for these lows forever, but we've just been consolidating like this. I mean, look at this thing about these pairs. They're so messy. Look at that. I don't like price action that's just whippy up and down like that. It's really, really not pleasant to trade. But again, if you did want to trade something like that, that is the reason why I don't have 20, 30 pip stop losses. I'm just showing you an example there of like the 3-touch trend line that tends to work quite nicely. The level on that, of course, would have been from the candle body close here, which worked here and also worked here again with a little bit of breaching, but that can be expected because you've got the trend line there. So if you know that, you're not going to get involved at the level, you're going to get involved a little bit higher up, which means you would basically drop down the levels and you'd see if there was something more applicable like this level right here, the 4-hour candle body close where we had price move down, then it pulled back a little bit. So I would go ahead and then I'd stick my level on that. Which would line up perfectly with that trend line. See? So anyway, that's how I approach it. Levels first, not trend lines or fibs or anything like that. The levels are your friend and they will keep you safe and they will make you money. Trust me. Euro New Zealand, I mean, this is way off EA now. So because of the New Zealand weakness, we've just had, you know, New Zealand, well, euro strength against the New Zealand dollar. So this one's skewed now, which is annoying because it was kind of following EA perfectly. We'd had this push down and then we'd consolidated. But yeah, it seems to be getting ahead of itself and moving higher already, which is fine. We just got to be patient and wait for a good setup. EuroCAD, these highs up here could be nice. This is the weekly candle body close, I believe. Yeah, so just from here. But the reason I might not want to take this level is because we've already used it here. And we used it there perfectly. Off of that, it's a 231 pip move. Actually, sorry, it was much more than that. It was right down to here. So it's a 335 pip move off that. But that's exactly how the weekly candle body closes work. And look, you've also got it back here. But this is not the level for me. I always take most recent price action. And the reason I don't like this as a level anymore is because my new level for that would now be here, right? So I'd be expecting a pullback from EuroCAD round about now. But I don't know how price has got there yet. All right, so we've moved up pretty strongly. But again, it's we haven't been away from it for too long. I prefer to see price has been away for a while, like moved away like this, done its thing, and then came back like, how far away was that? 189 days. So it's like half a year, right? More than half a year, 189 days. Yeah, about half a year. So that's kind of why I wouldn't be so keen to use that. I'd probably now wait for something else to be in play there. Yeah, maybe these higher levels, but anyway, there's plenty of stuff to trade daily with it. I just like the weekly levels because they are that much stronger and tend to work much, much better. It depends. It depends if you're patient enough to wait. Euro Swiss, same thing as pound Swiss, waiting for the upper level. Euro pound, really don't like trading this pair. The reason is it moves barely at all. Like, these are daily candles, and as you can see, this one here is like 25 pips. So if you want to get a pullback from a 25 pip daily move, it's basically got to retrace the whole thing and some before you get 30 pips. So that's why I don't like them. If you trade a little bit more longer term, like you're a swing trader or something, you can still apply exactly the same methodology that I'm doing here. Just you're going to be waiting a lot longer for trades to play out. And I just don't like being in the market for a long period of time because things can change. So, and this is based on pullbacks. So I just want to be in and out 2, 3, 4 hours. Like, it's perfect. A bit longer I can withstand, but to be in a trade for days and days, only if I'm holding the runner. but not if I'm trading it as usual. Euro dollar. So this actually played out the same as pound dollar this week. So where I had my initial pound dollar trade, could have equally have taken it on euro dollar. Also looked nice. And probably it was probably the better trade, to be honest, because we'd had a lot of pound bullishness, if that's a word, during the week. So the dollar was kind of fighting against it as it was gaining strength. So euro was a bit more normal, but delivered the same regardless. So it was all right in the end. But one of the things I wrote down on my journal for this week was that I probably should have looked at the euro over the pound, given the strength of the pound, just to give myself a bit more probability of getting a bigger move. But it is what it is. Main thing is I made a note of it, I've written it down, and I've learned from it. Well, I say I've learned from it. If I do it again this week, then obviously I haven't learned, but it's written down, so that's the first step. Euro yen, I'm just sitting on my hands with the yen pairs right now. I just want to see if they decide they want to move lower or if they're going to recover and push back up. Aussie dollar, we've got this weekly level coming up, but I don't like the fact that we've had this bullish wick here. Leads me to believe really that we want to push higher, and we're going to wait for the daily candle body close back here from 28th of December 2023. So I'm going to wait on that, and what I'll do is just put an alert on there, which could be totally irrelevant depending on how we open tonight, Sunday, isn't it? So how we open the market tonight. Aussie Swiss, same as the other Swiss pairs really. I want the upper levels to get hit, I believe. Yeah, it's a weekly and a daily level there. So yeah, it's fine. Happy with that. Aussie CAD. Probably some daily levels that I could take within here. It's just a bit messy. So that whole area there is a bit like, not really sure what to be looking for. So I'd rather go off a weekly level higher up, to be honest with that right now. Aussie New Zealand, we've obviously smashed past this level with the New Zealand weakness. And let's see. So yeah, here's an example of like why I don't want to use the same levels over and over again, and only the most recent price action. So this was the level from back here in June 2023, and then we've used it here in May, and that was the pullback that we got. So to use it again here, I just wouldn't really be looking to do that, because it's more likely for me that we're going to see price move higher based on the fact that we've come up, we've made a lower high, and so we're more likely to make a higher high, which we have. And price may start to struggle around here, but I think we could be heading up here just because of this type of price action that we're seeing now. But again, just going to wait to see how it plays out. I'm not trying to predict anything. We're literally just waiting for price to do its thing, move into a strong level, at which point we then execute. Aussie yen. This one's kind of cool. We broke above the level and then broke back in. So this bit of an indicator to me that the yen pairs will now start to make a pullback, if not all of them, at least Aussie yen. So it may be that we're seeing more Aussie weakness this week. Why? Because that's what my charts are telling me. I don't have a fundamental reason why. I don't need one. I think the charts are showing that we could see some more weakness here, maybe down to this level. But again, could be wrong. If we move higher, I've got no real references to use, I don't believe, on Aussie yen, because we're at all-time highs, I believe. Yeah, so there's literally nothing, even going back to like 1999, where price is sketchy, but we're at all-time highs up here. So very difficult to gauge what would happen there. We're literally like just waiting for price to do its thing and then give us the entries that we need. New Zealand dollar, I'm not looking at taking any trades on New Zealand pairs right now. I just want to see how it behaves this week when we open, because last week we had the weakness with it, with the New Zealand dollar. So I just want to see if that means we're going to continue to head lower. or whether we see something like this form. I'll put this here and we can just replay it and see where we got to, but that's where price moved off of. It's also been used previously. So I wouldn't be surprised if we see price action come up here to around the 6139 area and then sell off to maybe come and try these lows or clear them finally. Don't like the fact that we've just been stuck in this price range for a long time. So that's New Zealand dollar. New Zealand CAD, it's kind of a similar story. In fact, it looks almost identical, really. Same kind of shape. Not looking for anything in particular here at the moment. I've just got the absolute extremities on my chart right now. But yeah, we could see these daily levels get hit up here. We've been away for a little bit. So let's see. And prices, it's only 40 pips away. So I don't know. I would much rather just see a much stronger move like this. This is a valid setup, but as I said many times before, I don't want to be taking trades that are not high probability. So the fact that we've had that previously, I think that's only the 4 hour as well. So yeah, if I took the daily, it'd be that I'm looking at. So we're not really anywhere close. And this New Zealand weakness that we saw was, you know, it might be skewing the charts right now, meaning that if I take this price action using the price action tool, we might actually have been here by now, meaning that we'll have our 1, 2, 3 touch, and then the level that we'd sell off is here. But, you know, I don't know for sure. So that's why, again, I'm not really interested in taking any New Zealand pair this week. So I'll just skip the chat on them, to be honest. The New Zealand yen is a yen play anyway. Dollar yen, similar story, just had the same pullback. So we'll just see what happens with that. Yeah. Maybe we'll move lower, but until we do, I'm sitting on my hands, not interested in getting involved. Dollar CAD looks really messy as well. We've just been sideways for a long time. This range is like 200 pip range. So we're just moving up, moving down, moving up, moving down. I don't know whether this is about to roll over or if we are about to see some strength. Given the fact that what's happened over the weekend, I would say that we're going to see this drop a bit, but it's against the Canadian dollar, so we'll just have to see, wait for levels, and that's all I'm going to keep saying, really. I know it's kind of boring and repetitive, but that's how trading is, boring and repetitive. At least when you get to that point, you should be making good money from trading when it becomes boring and repetitive. Dollar Swiss, if we had that dollar weakness, would play into nicely the fact that we've got that weekly level down here. That would be a nice trade, I believe. And we take it up to this wick, which would give us a nice 67 pips. It's a Swiss pair, so it might move slowly, but you know, it's there. Swiss yen, it's a yen pair. Again, sitting on my hands, waiting. Gold, not got anything above this. I think we're at all-time highs. Yep. So with gold, just going to have to sit and wait and see what's happening with that, because yeah, it looks interesting, but there's nothing to go on technically. So no idea what's going to happen with that. Just waiting for lower levels for buys, but nothing to go on for sells on that. Same with silver. I haven't traded gold and silver for quite some time, but yeah. And the Dixie shows a very bearish finish to last week. So I wouldn't be surprised if we have more to go on that this week. I would like to see a bit of a pullback just before we do head lower, just because we've got that pound dollar trade in motion. So a bit of dollar strength will help that pullback play out. But if it doesn't, so be it. We'll just have to see what happens. And yeah, stocks up. Small pullback from Friday. US 30 actually looked pretty nice for a trade. So we also had this 1, 2, 3 touch on the weekly. And on the daily, we hit the weekly level, which was just here. So, and then we tapped into the trend line and then made a nice pullback from there. So this actually played out. I didn't trade that, but I'm paper trading it right now. I'd like to get more involved with trading the US 30, not the US 500, but the US 30 specifically. I like the way it's been moving lately. It's nice and clean. It's not too choppy. So yeah. And obviously if we open up the markets with very fearful sentiment, then stocks are probably going to take a hit. So let's keep an eye on that. Japanese stock market also selling off, but obviously we've seen that and felt that across the yen pairs. So we've hit this high up here. Again, nothing to trade on the Nikkei, the Japanese stock market, because this is an all-time high. We don't know what price would do when it gets up here. What else have we got? Oil's been pushing up. A bit of a consolidation at the moment. Wouldn't be surprised if we saw a bit more of a push and then a pullback. Bitcoin, I'm not going to go into because it's a separate topic. But yeah, that's it. That's kind of like what I'm looking for the week. And yeah, I hope that's been useful for you guys watching. If you haven't watched the previous weeks already, you can do so on the channel. I upload every video as its own individual video anyway, because I think there's lots you can take away just from these sessions. And yeah, let me know in the comments if it's been of any use, if it's helped you, if it's, you learned something from this, pop it in there. I always love to hear back what specifically helped you. And if you do have any questions, pop them in as well. I answer all the comments, every question. And yeah, just lastly, I suppose I'll just shamelessly plug the group once again. It's free to join. We've got the masterclass, which is in here, for you to learn exactly how I trade. We do 2 events a week. One is the weekly check-in with me, where you can ask me any questions. I'm live every Wednesday evening, so that we can have people from the US as well. For people in APAC region, there's always the recordings to watch back. Maybe be able to do something in the future for that region, but at the moment, this is what it is. And then we do the breakdown every week. So yeah, be cool to have you in there. So if you have got value from today's call, yeah, drop it in the comments below. And if there are no questions in the live chat, which I don't believe there are any, there is a small delay, so we'll just keep gibbering on for a moment. But yeah, if you enjoyed it, subscribe, hit the like button. YouTube likes all that stuff apparently. I'm trying to be more YouTubey, but yeah, I'm just a boring old trader, unfortunately, trying to put some videos on YouTube to help a few people out. So if it helps you, that helps me, makes me happy. Right now, it would make me even more happy to see England win tonight. So I'm going to wrap up the call. And yeah, catch you on the next one. But thanks for joining. And once again, hit the subscribe button, give the video a like. And yeah, I'll see you next week. Cheers, guys.